and welcome to today's video, which is called S&P 500 is at a make or break level. So let's examine together the charts, intermarket, internals, options, volatility, how to play it, what's the current array of forces, whether it favors the buyers or sellers, and how traders of various perspectives, be they swing or intraday, can, could, should, perhaps, be approaching that. So let's dive into it right from the weekly chart, right from the big picture, slowly refining it up to the hourly chart. We can see something that could be called a bear flag. However, this is a clear refusal to break further lower and gradual repair of market internals. For all the setbacks suffered and one crucial level respected on the upside, the same can be said about Sunday's gap at the moment. Yesterday, when the session was slowly starting after the opening bell, there had been quite a few encouraging attempts to buy the dip, and the gap had not been totally closed, which had of course favored the buyers at that moment. However, each of their buying attempts had fizzled out, and the finish to the session was on a very weak note, with basically almost every sector getting sold off across the board, which is not what the bulls want to see. Therefore, a test of Sunday's gap, a full test, meaning where Friday's aftermarket session had closed, the area had been fully closed during the opening part of the European session today pre-market. And as well, you can clearly see that wave of selling yesterday before the close of the regular US session had affected not just the weak semiconductors, which I had been talking about for quite some time, but as well the leading sector, financials. Thank you for liking this video and subscribing to the channel. Here is the crucial level and how price action, for now still above this area, is unfolding. During the night, during the opening part of the Asian session, it looked like the buyers were quite exhausted. Yet, clear influx of sell orders had arrived during the early part of the European session, and now prices are working to stabilize themselves. Will the buyers succeed or not? Such is the picture following yesterday's close on a one-day basis. Strongly risk-off day. Consumer discretionaries a little bit do stand out. However, the outperformance in staples is very clearly pointing the risk-off way, and the weakest sector to take particular note of is tech, and this has been hammered quite heavily over the last couple of days. You can see tech, data centers, utilities, Microsoft. It's the same story. The AI enthusiasm is being checked back heavily, very heavily, and encouragingly so. For all the consumer data gloom, we are not losing consumer stocks. Financials are the stalwart, keeping the index where it is, cushioned against the tech weakness. So it's a matter of where the relative outperformance of S&P 500 versus Nasdaq is, and whether, for example, the beaten down healthcare stocks would as well, due to their heavy weighting in the S&P 500 index, help the index to stabilize, and whether it embarks on a sideways move or not. Let's look into the volatility clues. Is it an upside rejection? Is it this bounce in rising volatility over the last 2 days? Is it over, or we would get a push through 20? Well, going into today, I would refine that view with my favorite volatility metric, comparing the ratio of VIX to short-term VIX, and it sees and it shows quite a guarded rise in volatility, which is being rejected. So I do favor rather this rolling over to the downside in the week ahead. We are just seeing now a bearish resurgence that had taken prices all the way till Sunday's gap, and we might see still some kind of an attempt to break through to the downside, which would be at some point bought. The fear has risen in the options arena as well as the put to call ratio with its high value, meaning preference of puts, shows. So this is speaking as well in favor of a lot of the downside being already in. But the easy trades had been made right as gold had woken up from its sideways consolidation yesterday. I had been bullish as well during the flash following United States opening bell and the fast recovery, and you can see that the price is well over 3,100 had been beaten to the upside, and for now gold is consolidating the high ground. I really like this silver chart where the pressure to go up is building, and one day will be a very important day for the silver market. So that's what trading signals clients already knew about more than yesterday, more than a day ago. So much for which markets to choose, where to play. It's about where the odds favor us most. Equities are kind of directionless, searching for the next move, be it to the upside or to the downside of that Sunday's gap. So the risk ratio would favor trying longs, however not letting a clear breakdown to happen. But it must be respected that for now the buyers have not proven themselves. So the short-term picture in equities is a bit unclear, and if one dives into the attempt at overcoming those that respected zone, which is what had happened during the encouraging pattern of rising highs, of higher highs and higher lows up till, say, Tuesday, that had been invalidated. So now it's up to when and where the buyers do step in again. And the volatility clues favor not such a long wait for this moment to arrive.